what better time to do a space like this with Tesla hitting all-time highs today, Bitcoin hitting all-time highs today? Some could say this space is good luck.
Yeah, I think the tide has turned. I've been saying that recently a few times.
Now, a topic which is near and dear to my heart, I actually hosted an entire space on it earlier today, and it's where we're going to start out here, is Tesla. And really this FSD versus Optimus, right? Battle of the Titans, which are both on a bullish side. And I wanted to start out with discussing FSD here and really how far away you believe that we are from achieving full self-drivings. And really the only way that I think there is to determine that, which is what benchmarks will signal that it has truly arrived, as this is a major part of the thesis behind Tesla stock.
Okay, well, I just want to clarify one thing. You had mentioned, Gab, early on, the crystal ball. I don't have a crystal ball, of course, but our analyst team is incredible. The depth of their research, the original research. So I'm definitely standing on their shoulders, as well as our directors and Brett Winton, our chief futurist. All of the answers I will give you today are in collaboration with my team. Now, what benchmarks? Well, as you know, we have published our Tesla model, and we've done many years of original research on Tesla. Right now, it does seem that, and Tesla has announced this, that it is going to introduce unsupervised ride hail in California and Texas starting this next year. Now, Tesla has defined human safety as in terms of 670,000 miles between critical interventions. Now, Waymo we see on the road every day if you're in certain parts of the country. I was in LA recently, and they were all over the place, and it was quite impressive. What we do not believe has passed that threshold, 670,000 miles between critical interventions. We do know that Tesla is hiring teleoperators as it has launched FSD here, FSD 13, the latest one. And that would suggest they're very close to commercialization. I think our model has said they will launch in 25. The probability of launching in 25 is 60%. The probability in 26 is 40%. So we did that model earlier this year. I would say the odds are higher for 2025 now. So we're pretty excited about it. And California and Texas is where they'll start because of the data of real world driving miles they have from all over the world, but especially all over the United States. We think they could proliferate the service much faster than Waymo will be able to do so, given its limited real world driving miles.
Great points, especially when it comes to the mileage here, which translating directly to experience and growth. One of the big topics that has been consistently touched upon, and this is not necessarily just exclusive to the development and adoption of FSD, but really all of the items within Tesla, is how could Elon Musk's involvement in the government influence the development and adoption of FSD, Optimus, other items? There seems to be a large move that's happened since the election, and Donald Trump has not even come into office yet. So I'm curious to get your thoughts on that.
Yeah, it's really interesting because, of course, Donald Trump has been anti-tax credits for EVs, and he's been very focused on, letting the market work. He thinks the market will lead more people to gas-powered vehicles. But what's interesting about I think Elon's fine with that because Tesla does not need tax credits the way that other auto companies need them to be viable even. So Tesla's going to be profitable without tax credits. What we do think he will influence from a regulatory point of view is whether or not autonomous mobility is going to be governed, at least robotaxis, governed by state regulatory authorities, so 50 of them, or by one federal authority. And we think that the latter is probably the way it's going to go, which means that autonomous mobility probably will proliferate much faster under this next administration than it would have under the prior administration. So we think it speeds up the scaling opportunity in autonomous in the United States.
Yeah, I could definitely see that happening. Let's flip a little bit away from FSD and talk Optimus here for a second. That's a huge discussion. And right now, it seems like we're still in the baby stages, quite honestly, right? We're seeing more and more, but we've seen the progression of FSD over many years. When you look at Optimus, what's your vision on timeline and true market potential?
It's been interesting as we've done our work on robots generally, but humanoid robots in particular. We have sized the market. So Sam Corris does our work here. And I should mention, he with Tasha Keeney, Daniel McGuire, have done our work on Tesla. In terms of, we're sizing the opportunity at $24 trillion. And you can see this in our Big Ideas 2024. We put this out in January, and you can see how we size the market and how we get there. Now, half of the market we think will be in the home, and half will be in manufacturing. And I think what's interesting about industrial robots is we're at a very, very low base right now. And if I think it's fewer than 1 million around the world. And if you've listened to Tesla and others talking about robots, we think, and we would agree with them, that we're probably going to see at least as many robots as people in the world ultimately. So there are 8 billion people in the world. So we're operating at an extremely low base right now. What's interesting about that is our Wright's law calculation is based on a cumulative doubling in the number of units produced. So what we look for is a very low base, because that means there are miles to go and the improvement could be pretty phenomenal. We know Elon has said that he thinks the Optimus opportunity is multiples of the autonomous taxi network opportunity. Now, he's sized that. He actually used our research at the annual meeting to say that he thought we were pretty close. He said that the value was $5 trillion. We would say it's closer to 8 trillion, but who's counting? He thinks the Optimus opportunity is several times larger than that. And so that kind of does agree with the market sizing I've given you. So while many people are looking at our autonomous mobility model as it relates to Tesla and our $2,600 price target for Tesla, with autonomous, 90% is the reason for that price target. No one is really integrating Optimus into the Tesla model, but they probably should. And even we've done very little, but we will in the next year. Now, if you think about what this opportunity is, and almost everything that Tesla and Elon are doing, this is the convergence of robotics, energy storage, and artificial intelligence. Autonomous vehicles are, humanoid robots are as well. And I think the limiting factor in terms of getting from here to our estimates is really the capabilities, especially the dexterity, the hands of the robot. And that's very much a function of AI. And anyone who saw the humanoid robot, I reposted it, who, even though there were teleoperators involved, but anyone who saw the humanoid robot catch that tennis ball time and time again accurately is getting a sense of how close we're getting to the right dexterity, the right time reaction of these robots to do very human-like things. And, what I find interesting about this, the history of automation has been the separation of human labor from production. And if you think about it, the humanoid robot will be the final step in that. And we agree with Elon. We think that's going to change the global economy fundamentally. So extremely exciting times ahead. And for Tesla, they're in the driver's seat on this one as well.
I'm really glad that you mentioned within their Wright's Law a relative of Moore's Law. I kind of had a question in that area that you can speak to, and you have talked about it on there as well when you were mentioning the progression of technology here. My question was going to be, does Moore's Law still apply today, or have we surpassed it with an accelerated pace of innovation when you look at AI? Perhaps you can speak to that.
Quickly on that one. The reason that question is coming up, there was a quote from Microsoft CEO Satya Nadella about Moore's Law, the doubling every 2 years. Direct quote, but we have now started to see progress in AI performance double roughly every 6 months. It's kind of the underlying part of this question. I'm curious your thoughts on is AI going faster, progressing faster than previous stuff?
Without a doubt. And we would agree with Satya. So anyone who has grown up in the industry with a focus on technology knows that Moore's Law is, half the cost in transistor technologies, really transistor density, half the cost every 18 months to 2 years. Now we're seeing half the cost in 6 months. The rate of change here is pretty phenomenal. In the case of AI, what's happening is there's a hardware and a software component to this. So halvings in hardware are occurring every year, and in software, even faster than every year. We were talking today about, during one of our research meetings about this, and, I learned, as I do every time in a research meeting, that we're going through the comparison between Moore's Law and Wright's Law. Wright's Law is really about essentially software-defined computing. It's a completely new model. And so it took us a long time to get to understand what the right unit metric was to figure out Wright's Law in artificial intelligence, especially given that we have to study both hardware and software. And we came up with a unit that had to do with data per unit of computing power. And we learned that for every cumulative doubling in the number of these units produced, costs, when you combined both hardware and software, were dropping %. Now, even more astonishing than that was the cost, or the time it took for that cumulative doubling was less than a year. And so we're seeing training costs drop 70% per year. Inference costs dropping 85 to 90% per year. We've never seen anything like this. It's extremely disruptive and transformative. So it's pretty exciting.
Great.
How do you continuously monitor how fast stuff is moving? And I'd be curious on how you with the pace of innovation moving so quickly right now, a model that might have worked last year, 2 years ago, might not work as well now. So I'm kind of curious on how you stay up to date on the models as you're looking at these new layers of innovation.
Yes. So Wright's Law is pretty consistent. So technology by technology, the percentage changes are different for every cumulative doubling, but they're very consistent over time. Our primary objective, and we've centered our research around trying to figure out what is the learning curve associated with these technologies. Doing that calculation for every cumulative doubling in units, and we can observe this. How much do costs decline for every cumulative doubling? And this observation of Wright's Law was in the early days of airplane manufacturing. A civil aeronautics engineer named Theodore Wright observed that when production went from 1 to 2 planes, efficiencies evolved. So they were able to do it for a percentage point lower cost. that same cost decline percentage-wise they observed. I've just given you the 48% for artificial intelligence. For industrial robots, it's 50%. For electric drivetrains, now that's on a higher base now, so the cumulative doublings are more difficult, but that's 28%. For DNA sequencing, short read sequencing, it's 40%. So, and we've been able, obviously, with evidence to study each of these platforms and confirm that that is the percentage decline. But now, another important thing to note is what will disturb the evolution of a new technology. It is some slowdown in the unit growth rate. Why might that happen? It might happen like it did during COVID, certainly happened for electric drivetrains. It happens because, well, the world shut down then. Units collapsed of everything. So we're very dependent on unit growth. Sometimes economics, like recessions, hurt it. Sometimes recessions help it. If there's a technology that is clearly better, cheaper, faster, more productive, more creative in terms of creating new products and services, sometimes a recession is good. So we have to be very tuned in to the unit dynamics as we are trying to figure out how these technologies are going to scale across sectors. And that's the other important thing here. The reason the ideas we're going after are so big is they are not limited to one sector. Our analyst responsibilities are broken out not by sector, not by industry, not by sub-industry for this reason. Our analyst responsibilities are broken out by technology because we believe these technologies, as the costs fall, they will scale across more and more sectors. More and more people will have access to them. That's why they're such big ideas.
It's a great question and answer. Definitely loving this. By the way, we already have nearly 1,700 people in here. If you're in the audience and you're enjoying, feel free to share out this space so that more people from your timeline can come and engage. You can easily retweet the initial post from my timeline, or Spaces allows you to tap the share button in the top right and share it out. This is also being recorded, so we will have a recording, and we're going to make a great recording afterwards to easily cut it up. So thank you again for being on here. I'm going to continue the conversation here, and I do want to get a Bitcoin question in here. I would say the three topics we'll probably discuss on now that we've covered a little bit of Tesla and AI are going to be Bitcoin, Palantir, and then Coinbase/Robinhood. But let's talk Bitcoin here. Bitcoin's at all-time highs. It reached 107, 108 area today. With Bitcoin at these levels, how do you approach the asset from an investment perspective?
Well, we approach not only Bitcoin, but the entire crypto asset ecosystem from the point of view that they are really three revolutions taking place at the same time. Bitcoin is leading the charge in the monetary revolution. We do believe it is the first global, digital, decentralized, private, meaning no government oversight, rules-based, and that's extremely important, monetary system in history. And from the beginning, we have always thought it's a big idea, but we also believe with time now, we believe that it is the biggest idea, the biggest of the three revolutions. We could see it, and you can go to our big ideas 2024 and 2023. I think this particular, what I'm about to say now, you'll find in 2023, not 2024. But there we delineate our price targets, bear, base, and bull, and we show how we get there, all the roles that coin is going to play. It is digital gold for sure. And in our bull case, we think it could be worth half of the gold market. So the gold market today is around 15 trillion. And so half of that would be 7.5 trillion. Just that opportunity is 6 times higher than where we are with Bitcoin. And that's just one of 7 roles that we think it will play. Very important is, especially since this new administration has stated that it's going to support Senator Lummis and her proposals to include Bitcoin in the Treasury. And, just penciling that out a bit, if you look at Treasury reserves today, total Treasury reserves are about 700 billion. And so a million Bitcoin at roughly today's prices would be 100 billion. So that would be about 14% of the Treasury at today's prices. And it could dominate if we're right and the price goes, our base case has been, in the $650,000 to $700,000 range. Our bull case is around 1.5 million. The more we see validation from the government, from regulators giving a green light for ETFs, from other nation states, El Salvador was the first. Russia is talking about adding Bitcoin to its reserves. That could be a very important contributor. One of the biggest is going to be institutional investment. This is a new asset class. And what does that mean? It does not behave like all other assets. Now, it means it has a low correlation. Anyone with a fiduciary responsibility, any asset allocator is looking for new asset classes to diversify and increase the return per unit risk over time. Bitcoin is doing that. And I think portfolios without it are going to, over time, look more and more like they're in the dark ages, that they're missing an entirely new asset class. So we think that could be huge as well. Now, why is all of this important? These are incremental opportunities. Of the 21 million units that will be mined in the long term, that's the limit. We're already over 19.5 million. So 1.5 million to go. And, there's a huge amount of incremental demand out there. So I think the reason the price is moving like this is more and more people are doing the arithmetic. I don't know if you want me to go into the other revolutions, but we do believe that Bitcoin is the prime mover in the monetary revolution, whereas Ether and Solana will be the prime movers in the financial services revolution and in what we call the next generation internet revolution, which is, like Bitcoin, we're talking about digital property rights here. And now that more and more of our time is spent online and more people, especially younger people, get their social status, more and more of it, online in the form of, Gucci skins or other statements like that. Digital property rights this is the first time ever, are going to become very important. And I know from my economics background that the best way to lift people and countries out of poverty is with immutable property rights. And I think that's one reason El Salvador has introduced Bitcoin. This is a form of digital property rights. NFTs, for those of you who have played those in the past, that's a form of digital property rights. So we think that's the long tail, and we don't know how big it's going to become. We do know that a lot of consumer companies, especially the luxury companies, are very focused on this space because there's going to be a positive feedback loop between social status building online and the desire to express it offline as well.
Well stated. And as you mentioned, your team has provided a lot of research on these areas as well, which people can access through the website. Evan, did you have any follow-up questions there on Bitcoin, perhaps in regards to Bitcoin Ethereum, Bitcoin Solana?
Yeah, no, I'm very curious on how you weigh that opportunity versus Bitcoin versus the other cryptos in there. I know we were talking about Tesla and kind of in your models, it was like 90% FST and 10% leaning towards Optimus. Are you a little bit more excited about Bitcoin or some of the other ones? And I am very curious to hear more about some of those other areas in crypto that you're interested in. I know you mentioned Ethereum, Solana, and a lot of talk on Bitcoin, but there are some others. Would love to hear it.
Sure. So on Bitcoin, we think it's the biggest idea. And part of the reason I'm sure is because we know the most about it. And we have a strong point of view, from a strong economic point of view. Art Laffer, who many people know because he's famous for the Laffer curve, which is more about tax rates than monetary policy. But he's also a monetary scholar. His mentor, Robert Mundell, won a Nobel Prize for his monetary theory. And when we did our first white paper with Art Laffer in 2015, when Bitcoin was $250, so over $100,000. This is absolutely the best investment of my lifetime. And we think there's still miles to go. We asked him to collaborate with us on it because we wanted his economic signature, his expertise. He put the paper down and he said, "This is what I have been waiting for since the US closed the gold window in 1971, went fully off of a system that had worked for decades and that had kept prices under control. It was called the Gold Exchange Standard. And basically, we shut it down and we lost all kinds of monetary discipline. And the 70s were a horrible time for inflation. Many of you might have read it in the history books. I lived through it. I was in gas lines 4 cars thick around the block in California in the mid 70s. I think I just started driving. So I lived through it and I saw gasoline prices going from 15 or 20 cents per gallon to crazy numbers. And today we see $5 and $6. So I've watched monetary policy come unhinged and felt it in my pocketbook, just like so many people have since COVID. So they have a taste of what life in the 70s was like, but it was so much worse, so much worse. I remember over a weekend, gasoline prices quadrupled. And I was a poor kid, so I'll never forget it. Anyway, we now have with Bitcoin a return to some kind of standard. And what's great about this, it's great for the dollar even. It's great for the US. Many people say, oh, it's going to take the place of the dollar. And we don't think that's the case. We think it'll take the place of a lot of other currencies in emerging markets, which are rife with corruption or don't know how to manage fiscal and monetary policies. But we think it's just good competition for the dollar, and it'll keep monetary authorities honest, much in the way gold has. But there are going to be a lot more votes cast with Bitcoin than with gold, because Bitcoin is digital. It's so much easier to get hold of. Of course, ETFs helped with gold, but Bitcoin, you don't even have to be hostage to ETFs. You can just hold self-custody it yourself. So we do think it's a very big idea. It's revolutionary. Art Laffer thinks he's 84 years old, just to give you a sense. And I do think he has influenced the Trump administration as well. So in terms of Ether and Solana, we've been watching Solana recently way out Ether. And I think one of the reasons, and I don't want to get into too much detail because I don't want to lose our audience here, but Ether is developing a lot of layer twos. There are a lot of layer twos building on top of Ether, not Solana. And therefore, it has depressed the demand for Ether relative to Solana, which doesn't have layer twos. Solana's also evolved in a way, just like Ether did relative to Bitcoin. It's cheaper and faster. But I think in terms of the big three, we think those three are it. at least for now, in terms of the monetary revolution and the financial services revolution and the digital property rights revolution. In terms of DeFi, you have Aave, which has been screaming recently. It is really a money market layer 2 ecosystem. We're seeing a lot of derivatives coming out of these two ecosystems, watching them carefully. It has taken time. Bitcoin usually leads a bull market, but I've been surprised at how slowly the other crypto assets have followed. And I do think, just back to the original discussion, the reason I focus on it more is this nation state treasury use case, the institutional asset manager use case. Those two, I think, are front and center now. I think they're going to play to the benefit of Bitcoin relative to the others.
I love the thoughts here on Bitcoin. I've been personally buying Bitcoin since around 8K. I believe stock market news started stocking up in a similar area and just along for the ride, and excited to see where it can go. And I love when people can outline in much more depth and detail why they have such conviction, which is what you just did there. Let's roll into a little conversation here around Robinhood. I actually just noticed, I guess everybody's on the bandwagon here of donate a couple $1 million to Donald Trump's campaign, right? Get in the good graces. Robinhood, I just saw Vlad Tenev donated $2 million, right? Now, of course, Bezos and Zuckerberg. Yeah.
Of course, everyone else did 1 million, so he came in with a double.
Yes. He got a one up. Evan will be coming in next with 3 million. In fact, he's getting ready. So let's talk a little Robinhood. So there's obviously a massive wealth transfer that's happening here, which is, I think, really great for everything that ARC stands for, right? It's retail investors as well being able to participate within this and understand transparency. When we look at Robinhood and Coinbase, how do these platforms fit into your thesis on this wealth transfer between generations? And what does that look like for the investing world and for the markets?
Yeah, it's very interesting. And Nick Gruss, who's an associate portfolio manager at ARC, and still his passion is research in this area. As we were doing both our digital asset work, and Lorenzo Valente and David Puel, Frank Downing, and I would say very importantly, Brett Winton, our chief futurist, we evolved this concept that China actually skipped a step, importantly, in terms of its evolution when it came to financial services. It, just like in telecommunications, China, they didn't build out landlines around the country for telecommunications. They went wireless first. So they skipped a step. They moved faster than we did. Same was true in financial services. They did not have built out throughout their country a physical bank branching system. They went directly to Alipay and WeChat Pay. And as we studied those quote unquote digital wallets, we began to say, wait a minute, those digital wallets are like bank branches in an individual's pocket or pocketbook. And we thought that was a very big idea, and it certainly proved to be the case. And we began to think about this for the rest of the world. We were slow because we had the financial rails in place already, meaning the bank branches and so forth. But we do know, and I think many of us feel the same way, that it was not pleasant going to a bank branch. The physical banking experience was not satisfying. In fact, as we were doing our early work here, there were surveys saying that young people would prefer to go to the dentist than to a bank branch. And so we thought, okay, what are both Coinbase and Robinhood, which are two of the ways we're expressing this thesis? Where did they start? They started mobile first. They were built for digital natives. And they became very right as they were adding services instead of just cute little features, but actual services like brokerage, checking and savings, credit and debit cards. And of course, each of them is developing or coming at the digital wallet opportunities from a different angle, but we think they're both going to be successful. Now, when I say that, this is a winner take most. I mentioned there were two in China, Alipay and WeChat Pay. So maybe it's Coinbase and Robinhood. You'll see in our ARKF and actually ARKK, which is the flagship, you'll see we own SoFi as well. They're developing very interesting relationships with their client bases. Seems to be almost a little more personal, relationship oriented, taking a leaf from maybe the traditional wealth advisor book. And they'll all converge on a solution. So, but those are the two that we've zeroed in on because this is a huge opportunity. This, when I started in the industry in the late 70s, when I was in college, I remember thinking, wow, I think at the time there were 50,000 banks in the US. It was somewhere between 25,000 and 50,000, and I just couldn't believe it. Now I think we're down to 4,000 banks. And so, of course, the service has become less personal and not as satisfying. And so there's this natural push into better, cheaper, faster. It's led by the younger demographic. And that's why these companies are growing so quickly. And I do think that now that we've seen more regulatory clarity, not as much as we want, I think that's going to happen in this next administration. Coinbase is already there, which had taken some crypto assets off of its platform just after it went through all of its own SEC problems. It's now starting to add them back in, so has some catch up to do, but is starting to run hard. Both of them are also going international in a big way. Coinbase is the most regulatory compliant exchange in the world, we believe, and we think we'll continue to take share from other exchanges. Although I'll tell you, Binance, we've been surprised, has really kept its share. And Robinhood is going to make its way through that world. I think its user interface, Apple-like approach to design is critically important to its success and has been one of the reasons it has been so successful here in the US and is starting to break new ground abroad.
Yeah, it's been really exciting following success. Both myself and Evan got to interview Vlad on a space decently recently. So a lot of those thoughts resonate with what you were saying. Evan, do you have another question there on the Robinhood topic?
The wealth transfer side of it is something that I'm really excited about. But what are some of the areas you think these new age kind of brokers or kind of big branches in your wallet need? I know Robinhood has been going more into adding stuff. I know they recently did an acquisition of a company going more on the institutional side. I'm curious on kind of what you want to see from those type of names to continue fulfill on that wealth transfer bank into your pocket type mission.
Yeah. So with every company these days, when we have our quarterly calls with management teams, we will often ask to speak with their technology team or some of the members of their technology teams. We want to understand what they're doing with artificial intelligence, with personal assistants, which are going to become very important. I mean, Shopify, any of you who use Shopify for shopping will see how quickly it's embracing AI to help with the shopping experience. We think the same thing is going to become very important in the financial services industry. There are more regulatory hurdles to overcome. And of course, AI is still subject to, some people call it hallucinations, others call it confabulation. So we can't have that with financial services and other very privacy-oriented and highly sensitive industries. But we do want to know what they're doing because we think that AI is going to separate the winners from the losers.
Perfect. Great question. Going to roll us over to the Palantir side of things. And Evan actually and I got to be up close and personal with them. We went to the Army-Navy game this past weekend together with the Palantir team. Yeah, it was a great experience. I mean, it's, a little cold out, but it's good people and good company warm you right up. I wanted to start with just your thoughts here on Palantir's positioning in the AI space.
Yeah, it's been interesting to get to know this company. And I think in the beginning, when people, analysts, investors hear what Palantir does, I can't tell you how many times I've heard, yeah, but these are just consultants. This is nothing more than a quote unquote body shop, high labor costs, not very scalable. Nothing could be further from the truth. There is a lot of consulting involved, but you're working with engineers. We went through Palantir's boot camp. I don't know if you have done that, but we got a taste of it. And sure, the consulting is with engineers as in our case, as an engineer was helping us to build out one of our reports, automated effectively. He consulted, but then what he was doing in the meantime was teaching us what to do. So really empowering us, which is fantastic. But what does Palantir do? The aha moment for me was, and we've done a podcast with Sham, the CTO, which that's when one of the light bulbs went off for me. Okay, Palantir is effectively, if you can imagine, all of these enterprises that have taken on all of these different software systems. You've got ERP, Enterprise Resource Planning. You've got Workday for human and financials. You've got sales for sales and marketing. What Palantir does is first get an enterprise really top level and says, okay, the most important thing you have to do right now is centralize your data. You have to figure out where your data is, bring it together into one place, clean it up, and they help, of course, and now we can talk. You also have to detail workflows in an excruciating way. In other words, they help very large enterprises prepare for the AI age. And this does take time. Their platform sits on top of all of those legacy software systems. So there's no rip and replace. The reason big enterprises don't switch to new ways of doing things is it's too painful to rip and replace and too costly. So they sit right on top, and then gradually, and then all at once, what they're doing is building on top of their platform. They're pulling from the old and really turning it into the new, their software platform. Now, they cut their teeth in the government and national security. So, in the beginning, when we bought Palantir and moved to St. Petersburg, which is where SOCOM is located, we learned just from talking to people around this area that when the Biden administration came into office, it did not want one company with so much control. And so it started breaking up the contracts. And we knew that was going to be a mistake. And we did pull away. I know we get a lot of attention for our trades. We did pull away from Palantir. Now it's one of our largest holdings. But what happened during the last 4 years is the Defense Department said, wait a minute, this is not working for us. We're more disorganized. And so then they started giving Palantir back those contracts. Their tagline is prototype to production. And, they really simplify everything and bring massive enterprises, whether they're government or commercial, into the AI age. And, I look at what has happened in the Middle East, and you can say it's Maven's, Palantir's Maven system, or the equivalent in Israel. We know Israel's doing a lot in AI when it comes to targeting. But it seems to me that some of the big wins, if you can call, there have been fugitives on the run since Ronald Reagan's time. They're getting them with these new targeting systems. I think it's changing the game, changing warfare completely, changing national security completely. So I don't know I'm sure if you listen to their calls, you'll know that they have taken some departments, they've given us some examples of taking a department with 2,000 people in it, focused on targeting these war criminals or fugitives. It used to be 2,000 people. Now it's only 20 people. Think about that. That's crazy in terms of productivity. So we're pretty excited about Palantir.
The excitement is definitely palpable, and we are as well. We got to meet with Sham and Joe and a couple other members of the team. I got to be right in the office where Dr. Carp does their earnings calls. It was a great experience. Yeah, we're super excited for everything that this firm is doing. Cathie, I'm sure I could sit here and ask you questions all day. I love the answers I'm getting. They help me to build conviction in a lot of things that I've been passionate about for a long time, but I wanted to keep this to an hour. As we wrap up here on a great discussion, are there any final thoughts, advice, insights you'd like to share with the audience before we close out?
Well, your audience, my guess, is already in a good place in terms of what I'm about to say. We've been through a 4-year period where time horizons shortened to such an extent that it certainly was harmful to our strategy, although the last 2 years we've come on strong. But it's been very volatile because the investor base in the world today is filled with all kinds of fears. And there have been a lot of things too, to worry about. But I think the winning strategy over the next 4 years, especially with this administration, is to extend time horizons and try and figure out how the world is going to work, not how it is working, how it's going to work, because the transformations associated with robotics, energy storage, artificial intelligence, blockchain technology, and something we didn't speak about, multi-omic sequencing, and all of the massive breakthroughs, maybe the most profound breakthroughs that AI will have in the life sciences space. If you take a longer term time horizon, ours is 5 years, and try and understand what these companies are really doing and how well positioned they are in many winner take most opportunities, because AI does mean winner take most.
Thank you so much for outlining that. We're very much on the same page and aligned here. And this was an exciting conversation. For those that came in latter portion of it, we discussed everything from Tesla, Bitcoin, AI, to Palantir, Hood, Coinbase, wealth transfer, and so much more. This is, again, recorded. You will be able to listen to it. I encourage you, if you haven't yet, to go ahead and follow Cathie Wood, who's on here. If you're interested in more discussions like this, we plan on having her back, hopefully within the next month or so, for a discussion around your venture arm.